Hi, my name's Gemma. I'm a subject specialist at BPP. Welcome to this presentation about F7 financial reporting, focusing on how we're going to tackle question 3 in the exam, which covers cash flows and interpretations. So, what are we going to cover during this session? First thing we're going to do is have a quick look at what the examiner says about performance generally in question 3. We're going to have a look a little bit about technique, and then we're going to go through a couple of questions. Okay, so there are several things that we look at in question 3, cash flows and interpretations. So first, let's think about cash flows. Generally, the examiner comments that students are very good at preparing a full cash flow statement. So we're not going to review that during this session. But students tend not to do so well when preparing a cash flow extracts question. So we're going to have a quick look at one of those towards the end of this session. With regards to interpretations, the examiner says students are very good at calculating ratios. When you decide to calculate gross profit margin, you can do that properly. The problem comes from discussing that ratio. Often students make irrelevant points or choose irrelevant ratios. So we're going to have a look at how do we decide what the best ratio is to calculate and make the points that you say particularly good for scoring marks. We're also going to make sure that you focus on the purpose of the report. The examiner says that generally students don't think about who the report is for. What does that person want from your analysis? So how do we think about that? And also, the examiner says students very often calculate a ratio and say it went up or it went down. That is not going to score you enough marks. We're going to look at how we can develop that from saying gross profit margin went up or down to something that's going to score proper marks and give a good, insightful interpretation. And finally, we need to remember to refer back to the scenario. So we're going to try and tackle all of these points by looking at a couple of questions. So firstly, let's think about our technique. So to look at the technique for this question, we're going to use a question from one of the previous exams. We're going to use Hardy, which is from the December 2010 exam. So first thing you need to do when tackling an interpretations question is to read the requirement. Our requirement here says analyse and discuss performance and position of Hardy. So you want to look at both aspects, both the income statement and the statement of financial position, as portrayed in the above financial statements and using the analysis. They've also told you as well, your analysis should be supported by profitability, liquidity and gearing. That's giving you a really good structure for your answer. The examiner is giving you some clues as to where to go. And finally, calculate some ratios. Up to 10 marks are available. So we know this question actually was for 25 marks. It's quite a generic interpretations question, but we know 10 marks are available for calculating ratios and the rest needs to be your interpretation. So once we've read the requirement, we're then going to read the question and analyse the data. So I've pulled up here for you some sections from that Hardy question. First of all, what we want to do at this stage is just do some very general analysis. Just want to read the question. What's going to jump out at you? What's interesting about this question? So if you have a look here in the income statements for this question, you can see that revenue's fallen by quite a significant amount, and so has the gross profit. So I'm automatically thinking, okay, what's going on here? Something's happened that's caused some downturn in the business. Margins appear to be down quite significantly, and I'm already thinking about what ratios I might want to calculate. My automatic assumption is some gross profit margin, so I've just jotted down on my page, got to do a percentage calculation. What else is going on? Well, overheads are up and the company has gone from a profit position to a loss position. So I'm concerned now there's something going on in this question, in this scenario, it means this company isn't doing so well. So I've got some ideas already about the kind of things I might want to talk about. So if we move on to look at the statement of financial position, what else jumps out at me? Well, I can see there's been a big fall in their non-current assets. Both the PPE and their investments have fallen in value. Now, that could be because of maybe a disposal, maybe they've decided to sell some stuff to generate some cash, or maybe we've got an impairment issue. So again, thinking about what it is that I might want to discuss in my question. Moving on. Current assets not particularly interesting. However, you notice that our bank balance has actually increased quite significantly, and that's quite a big surprise considering the poor performance in the income statement. So maybe there's something else underlying going on here. It's maybe not quite as simple as just a company that's not doing so well. If we have a look, there's obviously an increase in the shares and the share premium. So there's been a share issue in the year, trying to raise some cash. Be interesting to see how that share issue happened. And also you notice that they've repaid some non-current loans. So actually what they've chosen to do is generate some cash from somewhere and actually use that to repay off some debt that's not yet due. So maybe this company isn't doing as badly as we thought. Maybe this company is thinking about trying to improve its position or get itself into a better position in a difficult market. The last bit of information we need to have a look at is the narrative. Now, this narrative is going to be the most important bit for you when it comes to understanding what you need to talk about in the question. The examiner is going to give you the narrative because it gives you the clues to your answer. The narrative should have all the answers that you need. You should not ignore the narrative. It's the most important part. So if we just have a very quick look through, I'm not going to read through the whole narrative, but if you have a quick look, we can see there that there's been some very challenging market conditions. So that explains the fall in revenue and obviously the difficulty the company is having. We can also see there have been some falls in share prices and property values, and there's been some impairments. So there we go. There's our explanation already for our fall in our non-current assets. So you've already got your answer. We just need to put that down on paper. If you carry on down through, we can see that the impairment losses have caused excess charges to cost of sales. So that's going to cause our gross profit margin to fall. So there's 1.5 million extra expense there. And also the fair value mark to market for the investments has caused an additional 1.6 in admin expenses, causing our overheads to go up. You can see all of this is forcing our profit down. Now, obviously there's some difficult trading conditions here, but there's some unusual one-off expenses that are causing maybe the position to be much worse than we would have expected. Okay, let's have a look. Also, they've done a redundancy or gone through a redundancy programme, and I've got an additional expense there of 1.3 million. Again, that's gone to cost of sales, a further impact on our gross profit margin. So you're getting lots of things for you to be able to talk about. Okay. Finally, just towards the end, they've noted that their interest cost on their loan has increased. They've decided to pay off some of that loan early as a sensible way of reducing their costs, and they've done that by going through a rights issue. Now remember, a rights issue is where the existing shareholders are offered shares in proportion to their existing holding. The fact that the existing shareholders want to take up a rights issue is going to give you an indication that the existing shareholders are confident in the business, that they can see that the business is doing okay, that it is going to continue. So although we've got these downward movements in the income statement, and there's obviously some problems in the market, the shareholders are confident in the performance of the company. Okay, so that's our initial analysis. What we're going to move on to now is thinking about calculating our key ratios. Now, the question, as we said, is quite generic, but it does say liquidity, gearing, profitability. Think about those kind of areas when you're deciding what ratios to calculate. Okay, we picked up some key things. We picked up the gross margin. That would be a useful thing to pick up. We've picked up that share capital, share premium, and the loans have moved. So gearing seems an obvious choice as well. Use that initial analysis to really drive what it is that you want to calculate. Okay, so I've given you some suggestions here of ratios to calculate. As we said, there's 10 marks available. Okay, I've calculated 7 ratios here. Okay, and you'll notice what I have done as well is calculated the gross margin both as reported and by taking into account the one-off exceptional costs or the one-off unusual costs. That's giving me a better picture of what's really going on with this business and giving me something that's better or easier to explain. So we can see that last year gross margin was 27.7. This year it's 13.6, but if we adjust for those one-off costs, then we're looking at a margin of 23.1. That's given me lots of things to talk about. Now remember, the important thing you need to do is calculate these ratios and then talk about them. the examiner says students do not do well at discussing the ratios. Most students can get to this point and calculate the ratios, they just are not very good at explaining them. So we've calculated gross margin, gearing, and I've also calculated the current ratio because we've got that unusual increase in the cash balance. Okay, when you calculate your ratios, remember to pop them in an appendix. Okay, and then what you want to do is move on to thinking about discussing them. Okay, so what we need to do now is just do a very brief plan. Think about grouping your analysis into categories. Okay, so focus on the key areas that you want to talk about. That's profitability, liquidity, gearing. Give your answer some structure. Make some notes for yourself on your question paper and then start writing your answer. So here's my rough structure, the things I want to talk about. So I've gone profitability, liquidity and gearing, and I've just suggested some ratios that you might want to calculate under those headings that give you something to talk about. Okay, so now we need to write up our answers. Now this is the difficult bit. It might seem we've spent a lot of time planning up until here, and you will have spent a lot of time planning your answer. That's what will make a good answer. Okay, now writing up your answer, think about what you've discussed in your ratios, or the ratios you've identified, what you've identified from reading your analysis and reading the question, and ask yourself the key question, which is why? Why has this changed? Why has this happened? Okay, so I've just written up a couple of paragraphs and we'll just have a quick run through, just talking about those three ratios that I've calculated to give you an example of where you need to go to score some marks. So you can see here, Hardy appears to be struggling in the current economy. Revenues are down by 18% and gross profits are down by 60%, resulting in a loss compared to a profit in the prior year. So nice, just straightforward headline, what's going on? Clearly performance isn't very good. So what about that ratio? Well, we've said here, the downturn has caused some one-off impairment costs and redundancy expenses, okay, which have masked the underlying performance. So I'm explaining already why profits seem to be down by so much in comparison to revenue. So we've got some one-off costs. So I'm asking myself that why question all the time. Reported margin is 13.6, as we said. However, adjusting for the one-off costs is 23.1, which, although lower than last year's margin of 27.7, is much more representative of actual performance. So I've given you the ratio, I've used what I've calculated and then explained why. Why is it different? It's different because of these one-off costs. Okay, and you could go on and have a little bit more explanation of that, but I'm going to move on and have a look at the next ratio, which was gearing. So gearing has increased slightly from 21.7 to 22.7, so very small change. Ask yourself the question, why? Why has it changed? This is due in part to the fall in equity following the trading losses and the removal of the revaluation reserve. Okay. However, the rights issue and the resulting slight reduction in debt has mitigated the effects of this. That's going to score you lots of marks. Okay, you've given me a ratio and you've told me why. You've given me some insightful discussion. And that's the bit that's often missing in your answers, and that's the bit you need to work on. Okay, let's have a look at one more, which was the current ratio. So despite the poor economic conditions, the current ratio has actually improved to a healthy 1.8 to 1 from 1.0 to 1. So why has that happened? Give me an explanation. Why has the current ratio improved? Well, the cash injection from the rights issue has helped to boost those current assets. Okay. However, we probably need to do a little bit more analysis. We said here there are some further issues that need to be investigated, being the increase in inventory and trade payables, which could be a sign of deteriorating performance. So I've just given you a snippet here. You'd go on then to talk about things like inventory days and payables days and further explain the movement in those and why they've changed in the way that they have. So hopefully now you feel a little bit more prepared to tackle those interpretations questions. The key thing to remember to keep asking yourself is why? Why has this ratio changed? Use that narrative information because that will give you the key. Do not neglect the narrative. Okay, that was a 25-mark interpretations question. I just want to show you how interpretations could come up in another way. And this is deltoid from June 2010. And you'll notice here, this question was broken down into 3 parts. I've just picked up 2 here. There's actually only 8 marks available for a little bit of analysis, which says advise the loan provider on matters you would take into consideration when deciding whether to grant Deltoid its maturing loan note. Okay, so here, very specific interpretation. What we're being asked to do here is actually talk about just, should you renew the loan? Okay, so when you're thinking about your technique and your process, remember who you're preparing the report for. When you're thinking about calculating your ratios, think about what ratios would the loan provider be interested in. So things about liquidity, things about security, okay, maybe gearing. Just remember to focus. And obviously here you're looking at a lot less marks. You're only looking at 8 marks. So you're going to be looking at maybe only 2 or 3 ratios, but then some good explanation. And then finally, you've been asked, should they renew the loan note? So make sure you give a conclusion. The other side to question 3 is cash flows. Now, the examiner has said that generally students do well at preparing full-blown cash flow statements, so we're not going to have a look at those here. But I am just going to run through how to tackle a cash flow extracts question, because students do tend to find that they struggle a little bit here. So, how do we tackle an extracts question for a cash flow? First thing you need to do, as always, is read the requirement. What extracts do they want? Typically, you're going to be asked for 1 or 2 of the 3 sections from your cash flow. So operating, investing, or financing. Okay, so read the requirement. What is it that's going to go into those headings? So if I'm thinking about operating cash flows, then I need to be thinking about things like profit, depreciation, change in receivables. If it's financing, you need to think about debt, loans, share capital. So as soon as you read the requirement, have an idea about what the things that you're going to have to put into that section of the cash flow. Next, prepare yourself some pro formas. All I really mean here is just give yourself some headings, have a structure to pop your answer into. You can't really predict what's going to be in a cash flow. Okay, it could have a variety of different numbers, different lines. So don't spend too much time writing out a full-blown pro forma. All I just want are the headings. So if it's cash flow from investing activities or cash flow from financing activities. Next, read and annotate the question. So here you're going to be going through, highlighting up the question, identifying that's a financing cash flow, that's an investing cash flow, that's an operating cash flow. Which ones of these do I actually need? And finally, then you're going to do your calculations. So we're going to have a look at this question. This is Crosswire, and this is from the December 2009 exam. There were 8 marks available within question 3 for preparing some cash flow extracts. The question then went on to ask you to do some interpretations, which are the 2 things that go hand in hand. Okay, so let's focus on the extracts. So a requirement says amounts that would appear under the headings of investing activities and financing activities. So first things first, scribble down on your page, what do you expect to see under investing activities? Anything to do with property, plant and equipment, interest received, other companies' shares, development expenses. Have in your head what it is that you're looking for in the question. Then financing, so loans, finance leases, shares, dividends. Have that ready. Okay. So next thing we're going to do is read the question. Okay, have a look. Start trying to identify the things that we're after. So I've just picked up a few things here. There's some PPE and there's some development costs. And there's a reference note, so we'll have a look at that in a second. I know that I'm looking for things like additions and disposals to PP&E and additions to development costs, cash spent on those things. Current assets, not interested from this perspective. That would go in my operating section. Notice we've got some changes in the shares as well, so that's something I'd be interested in. Share changes are going to go into the financing section. Let's have a look down. What else have we got? Some loan notes. Those are going to go into the financing section as well. There's a provision. Not interested in the provision. That's operating. Finance lease obligations. Financing. Tax. Into the operating section. I don't need that. Carry on down through and see what else you can identify. Let's have a read of the additional information. So in our additional information, we've got some finance costs. Okay. So we're going to need to know about what's going on in there. And then if you have a read through, you'll see there are quite a few other little sections or some explanation of some of the other things that are going on in this company. So you'll notice here, on the 1st of October, Crosswire acquired a platinum mine at a cost of 5 million. Cost, how much did I actually spend on it? That's my cash outflow. That's what I need for my cash flow statement. Okay, carry on down. There's a bit of information about a provision. I don't care about provision, it's got nothing to do with cash. Remember, all I'm looking for are the cash flows that fit into those particular sections in my statement. Carry on down, they revalued some land. Again, I don't care about the revaluation of the land, it's got nothing to do with cash. Okay, keep going down, we took out a finance lease. Okay, finance leases are financing cash flows. How much cash did we spend on the finance lease? So if we keep going, we can see the lease provided for initial payment on the 1st of April of 2.4 million. So that's cash out. So cash outflow, it's going to go on my cash flow statement, followed by 8 six-monthly payments of 1.2 million. Okay, one of those is going to go in this year, another cash outflow. Okay, so we can see here also during the year the company disposed of some plant. Okay, the plant had a carrying amount of 500,000. I don't care. I'm not interested in the carrying amount. I want to know what cash did we receive on disposing of the plant, which we're told was 1.2 million. That's my cash inflow to go into my investing section. Then we move on. We spent 500,000 on development projects. Okay, spent, cash out. So that's also going to go into my investing section. If you carry on then, note 3 talks about the convertible loan notes. Now, the convertible loan notes are probably the trickiest bit in this question. There were 4 million of loan notes which matured in the year. 75% of those loan note holders chose to take the equity. So we need to think about the shares that we gave those loan note holders when we're looking at the changes in the share capital. 25% of them chose to take the cash. So nice and straightforward there. 25% of the 4 million was paid out in cash. So we've got a cash outflow in our financing section, and then we need to consider the shares that we gave when we're looking at the share capital to see if we raised any cash from other share issues. Lastly, we've got an analysis of the finance costs. So you can see there we've got finance lease charges. We've dealt with those within the cash flows for the finance lease. We've got an unwinding of a provision. It's got nothing to do with cash. And finally, we've got the interest. Now, there's no receivable or payable to do with interest on the statement of financial position, so we have to assume that that was all cash paid out in the year. So another financing cash outflow. So I've written all over my question. I've got an idea about all the things I want to put in my answer. Now let's have a look at my answer. So I've just given you here the 2 sections that you're going to have in your answer: cash flow from investing activities and cash flows from financing activities. And we've just pulled in the separate sections that we've needed, that we've identified. So you can see there's our 5 million to buy plant and equipment, and the proceeds from our disposal, and the money we spent on our development project. Nice and simple. Okay, be nice and methodical. Just go down through your question stage by stage. What are the separate things that you want to pop into the answer? Okay, in financing, we'll come back to the issue of the shares in a second. That's probably the trickiest bit, as we said. We've got the payments under the finance leases. So we've got the cash out. We've got the payments on the convertible loan stock. So the individuals, the 25% of them that took the cash. So that's your payment out. And then you've also got the interest on the loan notes. Okay, finally, let's look at the share capital. So we can see that the share capital, we started with 6 million of share capital share premium, and we finished the year with 11 million of share capital share premium. The change in the year was caused by that 3 million that we issued for the additional expiry on the loan notes. So the 4 million loan notes, of which 75% of them took shares. So that's our 3 million of shares that we've issued. And then by default, there must have been 2 million of shares issued on the market for cash. And that's what needs to go into your cash flow, is that 2 million share issue. Okay, so hopefully now you feel slightly more equipped to tackle one of the extracts questions, which don't come up that often, but when they do, students don't do so well. Okay, so remember, be nice and methodical, be clear and concise, step by step, work through the question and just pull out the separate things that you need. I hope that you found this presentation useful and you feel more equipped now to tackle question 3 within the exam. Good luck.